USD under pressure from falling yields as gold smashes through $2,000 video analysis http ntv4x.com news ID 41C88D85 2020 12:14:50 p.m. Market overview. Despite still being incredibly oversold as yet, there seems to be little sign of any imminent technical rally for the dollar. NBSP selling pressure has been more restricted in recent days as the discussions over fiscal support in Congress have continued. However, as House Speaker Nancy Pelosi has suggested that a deal is unlikely this week, we have seen the dollar faltering once more. It comes as Treasury yields have resumed their path lower. The U.S. 10-year yield jagged lower last week around the Fed decision, and has now dropped under 54 basis points, the April low, to now sit at its lowest since the spike low of early March, which hit 0.32%. The key beneficiaries of a weaker dollar and falling yields has come in the precious metals space. Silver has been launched higher once more and gold is now above $2,000 for the first time ever. With yields continuing to fall and the dollar pressured, the path higher for gold remains clear. Agreement over the next phase of fiscal support in the U.S. could be the trigger point for a reversal in the precious metals, but whilst Congress dithers, there is little resistance ahead. Wall Street closed higher last night, with the S&P 500 0.4% at 3,306, whilst U.S. futures are similarly higher again today, E-mini S&P 0.3%. Despite this, there was a slightly mixed look to Asian markets, with the Nikkei 0.3% and Shanghai Composite all but flat. In European markets, the outlook is looking positive today, with FTSE futures and DAX futures both 0.6% in early moves. In Forex, USD is again edging lower, with underperformance across the major pairs. AUD and NZD are performing well. In commodities, we see silver another 2% higher, whilst gold is around 0.7% higher. After 2 days of decent gains, oil is once more edging higher by around 0.2%. It is a day of services PMIs for July today on the economic calendar. The Eurozone final services PMI is at 0900 BST and is expected to be unrevised at 55.1 from the flash reading of 55.1, up from 48.3 final June. The Eurozone final composite PMI is expected to be unrevised at 54.8 flash July, up from 48.5 final June. But considering the upside surprise in the manufacturing data, there is another risk of a positive surprise here. The UK final services PMI is at 0930 BST and is expected to be unrevised at 56.6 flash July, 56.6, up from 47.1 final June. The UK final composite PMI is expected to be unrevised at 57.1 flash July, 57.1, final June at 47.7. Into the U.S. session, the ADP employment change for July is often seen as a lead for Friday's payrolls, with an expectation of 1.500 m down from 2.369 m in June. The U.S. international trade balance is at 1330 BST and is expected to see the deficit narrow slightly to $50.1 bn in June from $54.6 bn in May. The ISM non-manufacturing is at 1500 BNST and is expected to slip slightly to 55.0 from 57.1 in June. EIA crude oil inventories are at 1530 BST and are expected to show a drawdown of 3.3 m barrels after a huge drawdown of 10.6 m barrels last week. There is also a Fed speaker to keep an eye out for, with the FOMC's Loretta Mester voter, leans hawkish at 2200 BST. NBSP chart of the day AGBP-JPY. It is interesting that a sterling rally is beginning to hit the buffers on cable, but this also comes where sterling yen is hitting important resistance. On GBP-JPY, the trading band between 138.85–139.75 was an old range support in Q4 2019 that restricted the June rally. Now we see this latest rally into the band of resistance, but again beginning to struggle. Yesterday's negative candle was the second successive close lower, with the session failure at the 138.85 resistance, but also comes at a point where the RSI is tailing off over 70 again, similar to the June rally high. It is still early days though in calling for a correction. The stochastics are crossing lower, but would only really confirm a corrective signal on a move into the low 60s, whilst MACD lines are still rising. Essentially, with the acceleration higher over the past week now faltering, this could be the latest setup for a slide back towards the uptrend that has been in place since March comes in around 134.80 today. A move below initial support at 137.70 would begin to see the retracement set in at least towards the mini breakout 136.60. The bulls will still have designs on breaking through the ceiling NBSP of resistance though. A close above 139.75 would be the break to open the upside for the next key resistance band at 141.00. The caveat is the market consolidating at a key crossroads ahead of the Bank of England on Thursday. NBSP Brent crude oil. Are we starting to see some traction for the oil bulls building once more with two decisive positive candlesticks in a row? The market is looking higher towards the $44.90 July high. With growing bullish intent, could Brent crude be about to finally close the key March gap from $45.20? There has been a notable positive swing on momentum in recent sessions, with stochastics beginning to pull decisively higher for the first time in a month and RSI rising back into the 60s. We noted yesterday that the Bollinger Bands were at their most narrow since March 2017, a development which will tend to be seen prior to a decisive breakout. A close above $44.90 would be positive, but a close above $45.20 would be a strong signal now. The hourly chart shows support now $42.90, $43.25 as intraday weakness is now bought into. The support at $41.30 is increasingly important. NBSP Dow Jones Industrial Average. There has been a definite shift in the past couple of sessions, with the bulls regaining control. Closing back above the 26,610 pivot on Monday, the market then used this as a springboard for another decisive positive candlestick yesterday. The bulls will now very much be eyeing the 27,070 resistance of the July high. A closing breach of 27,070 opens the key June high of 27,580. Momentum indicators are swinging positively, with the bull cross on stochastics, RSI into the high 50s and even MACD lines looking to turn higher again. Weakness is once more a chance to buy, with the pivot around 26,610 a basis of support now. There is a gap still open at 26,440 which is a minor downside risk, whilst the importance of support at 25,990 is growing. NBSP. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.